Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, July 23rd, 2025, we're putting Alphabet, ticker Google, under the microscope. It's a crucial day for Google, with earnings expected to be reported, a major catalyst that could send the stock soaring or plunging. Let's start by looking at the broader picture on the one-day chart, encompassing all available data. As we zoom in on the one-day chart, observe GOOGL's trajectory since early 2024. The stock experienced a strong uptrend through early May 2025, reaching highs around the $200 to $205 mark. However, a significant reversal occurred in early May, followed by a noticeable decline. This dip brought the price down to levels not seen in months, aligning with the sentiment from Seeking Alpha that the $170 range might be an incredible opportunity. Indeed, our daily data shows a pivot bottom around $165.19 on June 23rd, exactly as reported by StockYinvest.us. Since that point, Google has staged an impressive rebound, climbing over 15%. Focusing on the more recent price action, particularly from June 23, 2025 to July 22, 2025, we can clearly see this strong upward momentum. The chart illustrates a consistent series of higher lows and higher highs, validating the 10-day consecutive winning streak mentioned in today's news. This recovery suggests strong buyer interest, possibly driven by the Guggenheim price target increase to $210 from $190, and the narrative of Alphabet being an overlooked AI play. The closing price for July 22nd, according to our data, was $191.34, which is notably sitting right on a key technical support level of $190.82 as identified by StockYinvest.us. This level, stemming from a broken short-term rising trend, is now acting as robust support. Moving to the 15-minute chart for the most recent trading period up to July 22 ND's close, we can observe the microstructure of this bullish sentiment. Notice the sustained buying pressure throughout the latter half of July 21st and early July 22nd, with relatively consistent volume. However, as StockYinvest.us warns, a decrease in volume alongside rising prices can be an early warning of divergence, indicating that the rally might be losing some steam or that participation is waning ahead of major news like earnings. The very end of the July 22nd trading day saw the price settle near $191.85, a slight uptick from the daily close, setting the stage for today's market open. This chart highlights how minor fluctuations still contribute to the overall daily picture, confirming the strength of recent rallies even amidst varied short-term volume. While our one-hour chart data is a bit older, let's examine a period of significant intraday volatility to understand how price movements unfold. Looking at July 8, 2025, specifically between 1300 hours Universal Time Coordinated and 1500 hours Universal Time Coordinated, we see a sharp decline from around $178.80 down to $174.21. This kind of rapid movement, often on higher volume, is typical around news events or broader market shifts, and it demonstrates how quickly support levels can be tested and potentially broken. Traders would be looking for significant volume during these drops, alongside candle formations like large red candles with small lower wicks, indicating strong selling pressure. Understanding these patterns, even from historical data, is crucial for reacting to the live market, especially on an earnings day like today. This is where active traders would consider short-term entries and exits, using tighter stop losses to manage risk. Returning to the daily chart to recap, Google is currently trading in the $191 to $192 range, with a strong support at $190.82. This level is critical. A sustained break below it could signal a short-term reversal, possibly heading towards the next support at $185.23, or even $176.20. On the bullish side, the immediate next resistance and potential trend top is identified at $207.73. The fact that the stock is overbought on the RSI 14, currently at 81, normally suggests a selling opportunity, yet the broken trend line indicates potential for further upside, albeit with increased risk. For short-term traders, the expected daily range for July 23rd is between $189.25 and $193.43, keeping an eye on the $182 stop-loss recommendation. Long-term investors should consider the seeking alpha view that the $170 range was a prime buying opportunity, and the current strong performance since then might validate that stance, but today's earnings are the absolute wild card. So, what are we looking for today, July 23rd, beyond the raw price action? The earnings report is paramount. Positive surprises, especially concerning AI initiatives or a stronger than expected core search business, could propel Google towards that $207.73 resistance and beyond, making the overbought RSI less of a concern in the short term. Conversely, any negative news, such as the threatened UK crackdown on mobile domination or weaker than expected earnings, could trigger a sharp sell-off, testing the strong support levels mentioned. High volume accompanying any significant move will reinforce the validity of that move, whether up or down. Keep a close watch on the pre-market and early trading sessions for clues about market sentiment. Remember to always trade with a plan, manage your risk, and stay informed. That's all for this in-depth analysis of Google on Explain the Charts. Don't forget to like, share, and subscribe for more insights.